Hey everyone, welcome back to another vacation episode of the Your Money, Your Life podcast. This is episode 339 of the pod, pre-recorded for you so that you could have the listening experience every week. Today we're going to talk about things that you need to do, some money moves you need to make before leaving your job or starting a business. So those are big things, a big milestone before leaving a job or starting a business. Here are some things, tips, strategies that you can use so that you're well prepared and then you go into that feeling strong, into that new chapter of life. Because we know leaving a job is not like just a career decision. It's actually something that has, a lot of ramifications that we may not think of. Tax stuff, cash flow, retirement, all these things play into the decision. So when you leave the job, here's some things that you want to think about, and make sure that, when you're leaving the paycheck and you're leaving benefits and you're leaving retirement contributions, tax, all that, all those different things, that you're built for that next step. The first thing you want to do is know your monthly number, your real monthly number. So that is your monthly expense number. Understand what you need to live. Understand what it costs for you to live with the quality of life that you want to maintain when you go on a new venture, leave a job to presumably start a business or any of those sort of things. Let's make sure that we understand that. And so that's the first thing. The next thing is understanding your actual, number. We talked about that, but building a larger cash cushion. So if someone's preparing to leave a job or preparing to do any of these things, start on your own, start fresh, anything, you want to understand your actual number, and then you also want to have a cash cushion for what you're going to do. So before you leave a job or business, you may want to have runway for income because when you start the new business, income could be really inconsistent early on for some people. So if you're going from W-2 income to business income, just make sure your emergency fund is set up for that. That could be 3 months, that could be 6 months, it could be 9 to 12 months, depending on how long you think it will take to ramp up that steady income, or at least project so a timetable where you can start to project what income is going to be. So that would be a good thing. Understand what benefits you're losing. This is a major one. So when people leave a job, you often focus just on the number, the salary, the compensation, but the employer was also paying and subsidizing for a lot. Actually, that you receiving that subsidization, and they were paying for that through your compensation, but you don't see some of that, right? Like health insurance, dental, vision, life insurance, disability insurance, the 401k match that you were getting potentially, I know, HSA accounts, paid time off, parental leave, all these different things are things that you are going to have access to most of the time when you work for an employer. So understanding, that your salary is just not just your full compensation. It's probably like 60%, right? All those other things I mentioned are another percentage, the other 30 to 40% that are stuff that you normally don't see and don't account for. But it's huge in the fact of like you need to understand that if you're maybe losing those access to those benefits temporarily, that you'll be okay. And as your business ramps up, as different things ramp up, you'll be able to take care of that in the future. So make sure you have a health insurance plan. Another thing to do is make sure you have a health insurance plan. Maybe you have a partner that works W-2 and you could be added on that. That's one thing. Um, so another point is deciding what to do with your old 401k. That's one that we encourage someone to roll it over into traditional IRA. That's usually the best bet for our people. One, it allows us to have everything organized because most of their other accounts are usually where we manage them. Also has a more robust investment options because 401ks are limited in the funds, investment options, securities that you are able to access. And so once it's rollover, it has the full gamut of access of funds and securities. But the worst thing to do is leaving it there. If you leave it there and forget it exists and never reviewing it, never reviewed how it's invested, never rebalancing, um, could be an issue later on because you could lose out on a lot. And also, you don't need to cash it out right away. Maybe you will need to cash it out as your venture takes time to ramp up, but you don't automatically have to cash it out because there's taxes and penalties that may apply if you're under the age of 59 and a half. So your old 401k is really just still part of your future. It just needs you to understand the strategy and what you're going to use for that. Number six, when you become self-employed, plan for taxes. This is probably one of the more important things. You'll see that some people forget this fact. Usually it's held from your paycheck if you're working W-2. And then you fully, let's say you get self-employed and things are ramping up and you just forget that, oh, wait, I have to pay Uncle Sam at the end of this rather than it being withheld from my paycheck. A lot of people run into that. So you want to set aside 25, 30% of income, for federal, state, deductions, business structure, all these different things. Find a CPA, start to work with someone, because you can, if you want to pay quarterly estimated taxes, there's going to be self-employment tax. Of course, you want to have your business deductions calculated in, all your bookkeeping squared away. So that's another thing is make sure you prepare for that, especially as income starts to ramp up. On the self-employment side, this is a simple one, but separate business and personal money. Yeah, that I agree with that. As sole proprietors or single member LLCs, though it gets kind of convoluted. But if you have an LLC, you are able to get a business checking account, business savings account, business credit card. So it helps for organization purposes, as well as other things. So creating an owner pay system is another way you can start paying yourself, as well. Keep investing. Once you ramp up the business, keep investing because now it's like on you for retirement. It's on your strategy, your implementation of a plan versus just relying on some 401k contributions. Maybe you want a Roth IRA, traditional, SEP, or solo 401k. All these are plans that are helpful for self-employed people and were typically created for people that are not tied to employer. Um, so another thing is, avoid lifestyle inflation. Know when to get help is another point. If you need different people on your team, because again, as a sole proprietor, self-employed person, a lot of times you want to do everything, which I understand. You could be control freak, want to get everything done, know how to get things done, but know also when you need experts in different areas that you may not want to spend a lot of your time in because there's not a lot of ROI for some things. So understand that, as well, it will be crucial for the growth of your business because you'll have more time to spend on said business. So that's, some really, really good tips. Again, this is a huge topic. You're going to see a lot of change with AI, with just in general, the market economy. So if you're going to plan to go out on your own, start to use these tips, utilize these things, use them, for how you're going to approach that new chapter in life, folks. So hopefully these tips are helpful. Make sure you tap in with us, the Your Money Life podcast, as well as New Street Advisors Group. We will see you next week.